Hi, welcome to Ag Marketing IQ by Farm Futures. We welcome Arlan Suderman today to talk about what we've got going on in the markets. And this will be our standard everyday question for our guests because we like to put them on the spot. Let's start out with, when did you do something that just went absolutely wrong with your marketing, Arlan?
Oh, I could think of plenty of times when I've been absolutely wrong with my marketing. Anyone who has the idea that they know what the markets are definitely going to do is probably going to be on a beach in Florida someplace rather than sharing the information. It shows that all of us in this field are out there giving our best information on what we think, but none of us really knows. And the most humbling experience comes when you first realize that and first learn that. I remember starting out working with farmers one-on-one as clients and helping them, and recognizing that I was pretty good sometimes at finding the bottom of the market. And that really hurts when you realize that you're having a big impact on their well-being and the well-being in their family and being able to put food on the table. That's quite humbling. And it's once you start to recognize that in and of ourselves that we're no smarter than anybody else, but maybe we can help provide some perspective to what's happening because we don't have the emotional investment in the markets, that we can do our homework, make sure that we've done our work to analyze the supply and demand fundamentals. Perhaps we can provide the perspective for making good decisions, and then things start to go a lot smoother.
Absolutely. I've heard more than one economist say or analyst say that that's where the issue is. Emotion is what makes it hard. And when you take the emotion out, it's a lot easier to figure out the market and what you want to do.
Yeah, and that's why most farmers really struggle with marketing, because they have so much blood, sweat, and tears invested in what they produce. And University of Nebraska did a study years ago looking at personality types and found that only about a fourth of farmers have the personality type that makes them natural marketers. Their spouses had a much higher percentage overall. And so sometimes it's better to just hand the marketing over to a spouse, or like they use an agronomist to help them out with their crops, maybe a marketing advisor to help them with their marketing, someone to partner with to take some of that emotion out.
Absolutely. And when I first started writing about marketing, it was when cotton farmers lost phase two. You may remember that there was the WTO complaint from Brazil. I can talk about that all day long. I still think that was a bad complaint and a bad decision. But my farmers in the South didn't know how to market. They never had to market. What they did was figure out when to pop their payment was the big thing then. And so what I wanted to do was help provide materials to farmers so that they could work with a consultant and do more than just put an X on the bottom line. That they couldn't be taken. They'd have an idea of what was supposed to be happening, and could have a conversation with that consultant, but still leave a lot of the decision making to them.
Well, when I took this job at StoneX, obviously most of our customers in the United States are commercial entities, from all the way from feedlots and from ethanol plants to food companies and everything in between, although we're now expanding more and more into working with producers as well. My heart and my passion has always been for the farmer. And so it's my desire as I'm working in this industry, I see what the major funds that move the markets, what access to the information they have. So my passion is to provide that same information to farmers so that they have the same information available to them as the traders in the trading pit, so to speak, although we're electronic now, so that farmers can make the same risk management decisions on that same information as what the big players do.
Absolutely. And our audience may be interested to know that we started here at Farm Futures more years ago than we want to admit. And that was your passion then. That was my passion then. And that hasn't changed. So it's good to know that whatever happens in the world, some things don't change, or at least some people don't.
Yeah, absolutely.
So when we're looking at, what we've got going on in the markets and looking at that passion to help our farmers succeed, they're not feeling like they've got a lot of opportunity to succeed here. But we're looking at the markets today and thinking, why aren't those numbers going higher? Because we're definitely seeing some weather issues in some areas. And can you speak to what you're thinking is going to happen with our yields and how that may or may not impact the market?
Yeah, absolutely. Back in April, we traded the tariff war, worries about losing business due to tariffs. And then once we got past April, the commodity markets just kind of set that aside, became numb and desensitized to the tariff headlines that were changing on the hour, so to speak, and said, we don't know how it's going to play out, but until we see how it's going to play out, let's trade what we know, and that's supply and demand fundamentals as we know it. And that's pretty much what they've been doing. Then as we got to late June, I started warning our customers, 4th of July holiday weekend is very pivotal for the corn and soybean markets. That is the time when traders leave on vacation for the 4th of July, Independence Day holiday. They come back, and on that Sunday night, they look at the weather models. If the weather models show heat and dryness in the Midwest, then they start rapidly building risk premium into the market. If they show mild temperatures looking out 15 days for the corn pollination, and they show periodic opportunities for rain, they start assuming that we're going to have high yields, maybe above trend yields, and they start shorting the market because they think, okay, it's going to be a big crop. We need to find demand for the increased supply. And whether you agree with that thinking or not, it's a reality of how so many of the fund managers trade. And so we started warning, and sure enough, we came back Sunday night. Yes, there was disappointment that President Trump didn't announce any type of trade deal on Thursday ahead of the holiday when he was in Iowa. There was speculation that might happen. But the main thing is that day after the 4th of July holiday is often so pivotal with the markets either surging higher or breaking lower. And there simply wasn't any news to push it higher at the time, and so push lower. And we do expect USDA on Friday to increase their old crop corn export target. And I think you could justify going up by another 75 million bushels, and we could actually see ending stocks for the current marketing year drop below 1.3 billion bushels. And so I get a lot of people on social media say, then why don't prices reflect that? Because once we get to this point in the season, the trade will say, well, we're not going to run out of corn ahead of the next harvest. We're close enough now that we have enough supplies to get us to next harvest. So the entire focus now is on the next harvest and what is the size of that crop. And then once they have a handle on the size of the crop, then they'll start looking at the demand story again.
So will the safrinha crop down in Brazil play into that as well? I mean, I'm thinking, good for today, good for tomorrow. When you go to the store, are you buying for just today or are you buying for tomorrow? And you're saying we're not going to buy for tomorrow. We just need to make sure we have enough for today.
When you look at the safrinha crop, which right now they're getting to be about a third harvested of that winter corn crop, it's the corn that they get their exportable supplies from, and the yields are coming in really good. And it's going to be a big crop. Now they're going to use about 4 to 5 million metric tons more for domestic ethanol production this year than last year, as they're kind of going through what we went through here in the States back in the early 2000s with the building of those ethanol plants. But as big as this crop is, combined with the Argentine crop, which is already basically 2/3 harvested or so, there's going to be a lot of exportable corn out of Brazil. And that mostly is a factor as we get into August, September, October, November, when they're really exporting that corn. And that's when we're going to see the hit on our exports, I believe. And as I look at my world balance sheet, I find it very difficult to find a combination that allows us to hit USDA's export target for the 25-26 marketing year. I don't think USDA is going to lower that target until we get to the fall this year. But I think they're going to eventually see that export demand isn't as strong as projected, not strong enough to hit that target, and those exports are going to start falling off. Mexico is going to continue to be a big customer because there's limits on the feeder cattle that can come north of the border because of the New World screwworm. And so those cattle, they were bringing 30,000 head per week into the United States prior to the border getting shut down. It's partially open now, but those cattle that can't come north will be fed in Mexico, which will require more corn imports, and then they'll feed the cattle there and ship the beef here. But I still think we're going to have trouble hitting USDA's target by quite a ways.
So what I hear you saying is it could be a long summer without a lot of action, but maybe a lot of action at the end of the coming into harvest.
Yeah, I think domestic demand is going to be strong. Exports are going to be solid, but not as big as this year. That's going to leave us with adequate supplies approaching more like 2 billion bushel vending stocks. Not necessarily burdensome, but not justifying of rallying prices. As you look at soybeans, it's a bigger concern there. We have smaller acreage this year. So if we do have a weather problem pop up in late July or August, we could really see that market pop. But if we continue on with favorable weather, then we're going to see supplies grow. China usually does a lot of buying of U.S. soybeans in the month of July for fall shipment. So far, they've booked virtually zero soybeans. And if that continues over the next few weeks, the market's going to start paying attention to the absence of China. And even though domestic demand looks stronger than USDA is projecting, I think exports could end up much smaller than what USDA is currently projecting. And that could be a bigger concern with big crop and low exports. So weather is still a big factor for soybeans, but really start paying attention to whether China comes back over the next few weeks.
All right, as always, and another thing that hasn't changed much is China kind of holds the cards, and we're paying close attention to everything they do there. Arlan, thank you so much for joining us on this first issue of Ag Marketing IQ in depth. We appreciate your time and energy, and look forward to seeing you again here.
Thanks, Pam. It's great to be back with Farm Futures.